Hello friends, since long time I have not posted any video, so I plan to post 3 videos recently. One of them will be for the beginner traders who have just come into market, have very little basic knowledge about charts and how to read a candlestick, red candle, green candle, and what is the duration of a candle. For example, here I am using 1 hour candle, so each candle is a story of 1 hour. In the previous 1 hour, what happened on the price of this particular stock or ETF. So suppose this candle, you can see all the details over here. This candle opened at 443 around and it closed at 446 around. It went a height of 446.29 and made a low of 442. So all the details is here with 1 hour, what happened in 1 hour candle of this particular stock, that is SPY ETF. So I'm planning to make 3 videos. One of them will be for beginner traders who just say, suppose you are trying to trade an option, looking at the charts, you do not know which stock to choose, what is the news in the market. You do not have to bother about all these things. You can pick any very standard and more volume stock or ETF. So for my elaboration here, demo here, I have picked SPY, which is the most highly volume stock or ETF. So I'll be using indicator, only one indicator. I'll be using VWMA, which is volume weighted moving average. The default is 20, so I will leave it as the default. RSI, it's always good to have RSI. You can learn for RSI with there are a lot of videos on RSI in YouTube. Even I have posted some videos, so I'll let the RSI be, but we're not going to check RSI, or maybe I'll just close it so it doesn't confuse the traders. So now how to add this particular indicator VWMA. So if you go to tradingview.com, open any particular chart, make a first of all make your account, then you will be able to add 3 indicators per chart with the basic trading view account. So let's go into this. I'll go into, say, technicals, and you can just type over here VWMA. It will give you the full form, volume weighted moving average. There are certain stars. Suppose if you like any particular indicator, you can just click the star and it will go into your favorites here. So I'm just adding this VWMA on my chart, and it has been added on my chart. I'll just go to the settings. Input I will leave as 20. With style, I like to see VWMA or VWAP into black, and I'll make it little bit bolder line. The line will look more bold on the chart so that it's easily readable and you can view. So now here, first of all, understand what is the concept we are going to handle is, we'll make a trade for a small profit. Okay, so we'll make such a trade that we are able to gain a $1 move on SPY. Okay, so whatever profit you get on the option depends on the delta of that option. Okay, so suppose if you choose option which has a delta of say 0.2, so if the stock price of SPY moves by $1, your option will move by 0.2, and you can gain $20 on that option. If it is in the positive direction, in the upper direction, it will be a call and you gain $20 on that call. So like that, at small profit. Okay, if you choose such a call which has, say, suppose a delta of 0.35, so on the same $1 rise in SPY, you can gain amount of $35 on one contract. So this is more for learning. Don't try to invest too much money on this particular strategy, but trust me, it works always. If you are a beginner, you don't have much knowledge, you don't want to you don't have time to go through all the news, and it's very difficult to predict what will be the impact of any particular news or any particular earnings which are posted by the company. So in these cases you can just use this VWMA, choose a stock or a ETF which has high volume, for example SPY, Apple, Facebook, Nvidia, Microsoft. So these have high volume on the stock as well as on the option. Okay, so I have chosen SPY for my demo purpose. Now coming to this main point, what is the strategy? Okay, so I have just detailed it around here in words. So VWMA is my indicator. I will be using 1 hour per candle chart. So each candle will be 1 hour. For all the beginners or who are like 1 to 2, even 1 to 2 years experienced in market, I would definitely suggest not to use candle chart less than 1 hour. Okay, that is my suggestion, my view. If you have gained good profit using candle size of smaller period, you can definitely continue. But if you are finding it difficult to trade, always use 1 hour candle. You have more time to react. Okay, if you choose smaller period candles, you do not get much time to react on the price. If you use say 3-minute candles, you have to get inside a trade within seconds, and once you see a profit, you have to come out within seconds. If you miss that like 10 to 15 seconds, the price will change. Okay, so I definitely suggest 1 hour candles. Now what is the strategy? The strategy is I would enter a call when my candle crosses VWMA. First of all, a candle should cross VWMA. It's not like some candle opened above VWMA and it kept continued higher or above VWMA. Not that candle. We are not going to trade that particular candle. Okay, we'll choose a candle which crosses VWMA. That is the main point. And the candle should give me a closing of 0.5% above the VWMA. So I'm talking more on the call side. Currently I'm talking more on the call side. If you understand the call side well, it's very easy to reuse the same concept on the put side. Okay, so when a candle closes 0.5% above VWMA and it crosses and closes 0.5% above VWMA, we're going to enter a call. What will be my stop loss? My stop loss will be same 0.5% below VWMA. Now see this, you don't have to be very exact, you don't need to use calculators and all, just very general math. So this SPY, as you can see, this is $437 stock. So if you go by 0.5%, it will be like around $2.10 or $2.15. Okay, so let's round it off to $2. So now the idea which I'm going to get over here is whenever whenever a candle crosses this VWMA and it's able to give a close 0.5% or $2 above this VWMA, okay, we will enter a call. Okay, it's not that it will be exact $2. Sometimes like there is a big candle and it closes $3 above VWMA, it's good, you can enter that call, no problem. Even if it closes $4 above VWMA, it's still good. It has crossed VWMA and it has closed $4 above VWMA, good, you can enter that particular candle on the call side. Remember, what is your profit target? Your profit target is just $1 on SPY. That is a quick trade. Okay, if you see here, the stop loss is more, like you are using a stop loss of around approx $4, but still this scenario will not come. This scenario generally doesn't happen. Okay, so you must use a stop loss always. Don't get inside any trade without a stop loss, or you can even choose VWMA itself as a stop loss. You don't need to go below VWMA. VWMA itself you can choose as a stop loss, but sometimes markets are very volatile, so I would suggest to give little bit length on the stop loss side also. But what will happen is if you are aiming for very less gain, $1 gain, you will quickly able to gain it. So let's see over here. It happened very nicely. Let me not take this example. I'll just take a random example. Maybe I will just choose a date and then we can go on that date. So let's choose like say what happened around 10th of January. Okay, so this is February, now we are in January. Now here you can see 10th of January. 10th of January, the first candle was a red candle, then the market started to grow. Okay, and 11:30, 12:30, 1:30, then 2:30, and at 3:30 this candle. I won't suggest anyone to trade in the first hour and the last hour. Don't trade in these times, like 9:30 to 10:30 avoid trading. Same 3 p.m. to 4 p.m. Eastern, avoid trading. So I would just avoid trading. I won't even look into the charts after 3 p.m. Let me go on the next day. Next day you see that this particular candle at 11th January, the red candle, as you can see, it closed below VWMA. But it was not enough. The difference VWMA value will show here and the close value will show here. So you can see that the closing was 464 and VWMA is also around 464.3. so there was not a $2 gap. Let's take the next candle, which is a green candle. Okay, so VWMA remains 464.3 and the closing of this candle was 466.5. okay, so you get that $2 difference. You are getting that $2 difference. Now you are at the close of this candle, means 466.5. when you are near that price, just enter a call which has a good delta value. Okay, which has a good delta value. In SPY you have Monday, Wednesday and Friday expiries. So definitely never ever trade the same day expiry. If you are trading on a Monday, minimum choose a Wednesday or a Friday expiry. Never ever choose the same day expiry. Okay, so now here you entered in a trade at 466.5 on a call side, and you can see the very next candle itself it moved up to 468. So my target was $1. That would have been like 467.5, something more than that, 467.75. so you easily make that amount. I would definitely recommend for beginners to get that profit, come out. Okay, always try to in this strategy, this is more of a day trade strategy, and in this strategy you have to get inside inside a trade and remain in that trade for as less amount of time as possible. So maybe 1 hour, 2 hour, 3 hours maximum. You don't have to stay more than 3 hours. If it is not moving in your direction in till 3 hours, still I would say whatever profit or maybe a small loss if you are getting, just exit that trade. Okay, so this is on the call side. Now I have mentioned the same thing on the put side. So if a candle crosses VWMA, a red candle coming down candle crosses VWMA and it closes 0.5% below VWMA, you can just enter a put, and the stop loss you can consider the VWMA itself as the stop loss. You need not go as 0.5% above VWMA for a put. You can consider VWMA, the value of VWMA itself you can consider as stop loss for the put. Okay, so let's see a put scenario again. See, I don't remember all the charts, so okay, see this particular scenario here, this is 13th January. This particular candle, the VWMA you can see here and the closing you can see here. It closed at 467.68, 467.89 was so it was almost same. The next candle was a green. I am still waiting. I don't see any proper reason to enter a trade. The next candle is 1:30 p.m. VWMA is 468.5 and closing is 467.5. still I don't have a trade. The next candle, yeah, one more thing I would like to add. It's not necessary that the same candle goes 0.5% above or below the VWMA. You can enter if the next candle also it gives closing like 0.5% whenever next candle or next to next candle, whenever you get closing, once the price has crossed VWMA in either direction. Now since we are considering puts, we are talking about puts, so if the price of the stock has gone below VWMA, so whenever the candle closes, this is very important, you just can't enter as soon as the price went and you enter, don't do that. Let the 1 hour candle close. Okay, so and this also helps you. You don't have to keep watching the chart for every minute and second. Okay, so suppose this candle started at 12:30 p.m. it will end at 1:30 p.m. so you just need to see the chart at say 1:28 p.m. last 2 minutes of each candle you can watch. 1:28 p.m. you are watching. Okay, you don't have a closing 0.5% below VWMA, leave it. Next, when I'm going to watch for the next candle. I will let the candle do whatever it wants to do. I'll let the market do whatever it wants to do, and I will watch this candle at 2:28 p.m. means 2 minutes before closing of the next hour. Okay, so you can continue doing whatever the day job or the day work you have. You don't need to check each and every moment on that chart. Okay, so this particular candle, if we see, the closing was 467.5 and VWMA was 468.5. no, I don't have a trade, I don't have a $2 difference. Next one, the VWMA is 468.7 and the closing of this particular is 466.25. so yes, here I'm going to enter trade. Okay, so yeah, if I just click here, I have drawn a line for you. Okay, so this particular line I have entered a trade. My target is $1. Once you enter the trade, try to just see the delta of your option, and you can place an order like whatever price you have entered. For suppose you entered a call of 2.5 and your delta is 0.30, so just enter a sale. You can mark a sale call, sell order also for 2.8 means 2.5 plus delta value, so you can mark a sale value for 2.8, and when the stock falls or the ETF falls by $1, it's most likely to get executed. And yeah, so you entered at 466.25 and the next candle, if you see, the closing is 464.50, which is, even it went at a low of 463.48. okay, so it went almost near to $2.75 in that next hour. Okay, so very easily you will get your profit, exit the market. You take that profit, exit the market. So see, the option you would have entered at 2.5, you got a profit of 0.30, which is around 12%, 12 to 13% profit you gained in that, like maximum 30 to 40 minutes. Normally in the very next candle the profit comes. Okay, I have seen it, I have done the back testing also, and I have used this trading, this particular style of trading multiple times. Okay, and the profit generally comes in like 30 to 40 minutes, or maybe very next candle the profit will come. Let's see one more last example over here, what happened. Now this is at 3 p.m. I would suggest not to do the trade. Next day again, this is at 3:30 p.m. okay, so if you see the value of your, this is on 25th of January, the value of VWMA is 435.36 and the closing is 437.32. yes, the trade is there. You can enter, approximately $2 difference. You enter the trade at 437.30, and if you see the next candle, very next candle, the price went a high of 439.7. okay, so 437.3 and 439.7 means you got more than $2 on the very next candle. You just book your profit for $1. You did not wait for $2. Okay, make sure you don't wait too much. You just collect your profit of $1 and exit. Okay, in this strategy you have to basically remain out of market most of the time. You have to enter the market only when you see this. Now here, why I said 0.5%, this particular example, if you see the closing was 458.1 and the VWMA is 457.63. no, you don't have a trade. Even the next candle, it's almost same, you don't have a trade. So even though it crossed over here, it crossed above VWMA, but because of this 0.5%, that buffer thing that you have kept, okay, because of that you didn't enter a call and you did not lose any money on your on a stop loss. Okay, so try this strategy, let me know how it works. Try this with paper trading. With for paper trading you need not have a paper trade account. Okay, when you observe, when you find this opportunity, note the price of the option which you are going to buy. Okay, and then after like for the next 30 to 40 minutes, see did that strategy work. Okay, note it on a piece of paper. After 30 minutes, after 40 minutes, see whether the price went to your target or not. So that itself you can do as paper trading, and you can let me know this strategy worked for you or not. Okay, on the next, so this is all I had to add on this video. Yeah, one more thing, VWMA, lot of traders are using VWAP. Okay, so the VWAP is like a daily indicator. The VWAP thing changes on daily basis. Okay, so I don't like much on the VWAP. VWMA is more smooth indicator. In a VWAP you will see more steps coming. So yeah, if I just VWAP is here, volume weighted average price. Okay, oh my god, this is some other VWAP. Okay, so yeah, I have entered a VWAP. If you see here, I will just hide my VWMA, and on the VWAP I will just do the settings so that you see only the VWAP. Okay, and we'll make this line bold. Okay, so if you see the VWAP moves along with the price of that particular stock or ETF, and it's more in the step format. Okay, so people trade, lot of people say that when it crosses above VWAP, go into a call. When it goes below VWAP, go into a put. Okay, yeah, if you follow that, if you are gaining, I don't challenge any particular strategy, but I like VWMA more. It's more of a smooth indicator. So once the price goes above VWMA, it will remain above VWMA for certain time. If there is a big dip, for example in recent days, because of Ukraine tension, the sorry, markets were falling so much time, so it remained below VWMA for long time. You don't have a confusion. It doesn't give you any confusion that okay, you got a green candle, now you can enter a call. No, it's clearly below VWMA, you don't have to enter. Let's again see what VWAP would have done over there. Okay, VWAP I have to correct, to hide these things and make it little bit bold and leave it blue. Okay, so here you see this particular candle, it went above VWAP. You would think that okay, you can enter a call. No, it was not a call. You can't enter a call over here. Okay, you would have lost your money if you entered a call over here. So VWMA is more smooth indicator, and it helps you predict your trade better than VWAP. That's my analysis. Again, I'm not challenging anyone. Okay. So yeah, I will just hide VWAP. I will leave the VWMA indicator on my chart. So use this strategy. In the next two videos, one more video I'm going to make on um, with chart analysis using indicators, and that will be again for day traders. And one more video I'll make where traders can try to, or they can use that strategy and try to make uh, gain on the huge moves. For example, this was a huge falling move, and then this was a huge uh, rising move. So this kind of huge moves you can gain. You just have to hold your positions with patience, and you can gain. Suppose if you entered a put at 440, you could have at least made up to this point 431. That would have been like $9 on SPY, which would have been a great profit. So similarly, if you entered a call, say suppose 420 or maybe 423, and went up till 437, which is around $14 move on SPY, which again would have been a great move. So these kind of moves you can capture. I'll create a video on that also. So keep watching my channel, and good luck with trading. Any questions or anything you want to ask on this particular strategy, you can post in your comments. Yeah, with this particular strategy, you can make it easy by saying, like for example, my VWMA is 424.50. Currently the price is above VWMA. So what I will do is I will just go $2 below that, approx $2 below that, and I'll keep an alert. Okay, so here, yeah, so I have created an alert like this for 424.6. I have created an alert for 422.5. okay, so approx $2 difference. If the price goes below this particular line, I will get alerted. I will keep a watch over there whether I should enter a put or not. Okay, based on this strategy, with upon closing of a candle, whether I should enter a put or not, I will just um, make a note when the price comes here. Okay, so similarly you can add alerts, and you can keep a watch on the market without every second watching your charts. Okay, uh, if you don't have a premier account with TradingView or a paid account with TradingView, you may not be able to add so many alerts. So in that case, you can use investing.com. Suppose now you know your VWMA price, you can go to investing.com and you can create an alert for uh, uh, price of SPY going below 422.6. okay, so VWMA was 424.6. You want to enter a put when the price is below 422.6. so you can create alert on investing.com for SPY. So that will help you to create alerts also. That way you can make your trading more efficient, and no need to keep staring at the charts. Okay, so remember, for this strategy, your candle, at least one candle should cross the VWMA. For example, it had crossed VWMA over here, so it has crossed on the downside. So I will look for put opportunities over here. Here again my candle has crossed above VWMA, so from here I will start looking for call opportunities when the price closes $2 above the VWMA. okay, so the crossing is very important. You can trade over here. I don't suggest, like for here this candle opened much below VWMA and it kept going down and down. So no, you have to wait for the time when it recovers above VWMA and you enter your calls. Okay, so this strategy also helps the beginners, and it also keeps you out of market for more time. Okay, so beginners, you have more interest to learn, so better you learn first. You learn with simple tools and simple strategies. When you start getting that 20, 30, $40 profit, uh, whenever this strategy works, you will gain more confidence. on this strategy and how to use chart and how to trade with market, then you can use strategies which will give you higher profit. Okay, if you are trading really with your real money, always try to keep your risk very much defined and keep it low. Don't go more than one contract. One contract itself means you are trading around 100 shares of SPY. Okay, so don't trade more than one contract. Also, you must keep stop loss wherever you feel comfortable. You can keep 0.5% below VWMA or VWMA itself as a stop loss. Okay, so yeah, I will keep this screen at the end of my session, and I'm going to end this session. Thank you all for watching till the end. Wish you good luck, happy learning. This is more for learning than to gain profit. So happy learning, and just enjoy your days in coming your coming days with markets. Good day.